and welcome back to yet another exciting week of the Lazy Money Game. In this week's episode, I will start by giving an update to my portfolio, and afterwards we will continue this discussion regarding recessions, since I saw an interesting video from the Wall Street Journal where they are discussing how this recession will be different if we are indeed going into a recession. Then there has been quarterly numbers out from Citigroup and from JPM. I think it's quite relevant to look at those as well when we are talking about this recession fear. And finally, at the end, I will touch upon some learning points from some of the greatest investors of all time as well. So let's start with a quick portfolio update. Well, the first thing we immediately notice is that there was a red circle for this week's episode. If we go to the portfolio values tab, you can see that the portfolio is down $800 compared to last week. And at the same time, you can see that the cost is still unchanged, meaning 11 weeks in a row now where I haven't done a new investment. And if we continue to my favorites tab, namely the dividends tab, then we can see this has been a pretty good week since I have received dividends from Merck and from ADC. So now I'm close to $300 for July so far. If we then go back to the overview arc here and scroll all the way to the top, just so you can see how each individual stock has been performing, well, then the biggest change is in Citigroup, since Citigroup came out with a rather good quarterly result on Friday, and the stock was up close to 14%. So this was just a short update to the portfolio. If we then continue on the topic of recessions, then Wall Street Journal has made a rather interesting video. I will of course leave a link in the description. It's a 5-minute video where they explain that if we are going to have a recession in 2022, it's going to be a rather different recession than what we saw earlier, since currently the unemployment rate is rather low, and at the same time, a lot of companies have substantial financial means to actually weather such a recession. And one of the things which I particularly like about this video is that they take their time to explain how a recession can start through this circular argument. A recession can start from people spending less money, meaning businesses will make fewer profits, which again would lead to businesses firing or laying off workers, which again would lower workers' spending, meaning people will spend less money. So you have this circle, and it can start in any one of these points. So this is a natural segue to a very famous quote from Mark Twain, namely that history never repeats itself, but it often rhymes, meaning we don't know when exactly we will hit by the next recession or how it will start in this circular argument, but we need to prepare for whatever actually happens. If we then turn to the quarterly results from Citigroup and JPM, it's not because I want to go into detail with them. What I want to highlight here is that Citigroup came out with a very good, positive quarterly result, and JPM, that was more a mixed bag, perhaps leaning more towards the bad side actually. But one thing that both of these companies have in common as major banks in the United States are that they are both holding their share repurchase program, meaning instead of buying back their own shares, they are actually storing that cash, so they are bolstering themselves to be able to weather a worse storm than if they continued their share repurchase program. And then you might ask, why is this at all relevant to my portfolio, what the big banks are doing? Well, since this is two major international banks and they are stopping to repurchasing their shares even though they have dropped dramatically, well, that means that they must expect something severe to happen. So if I were to follow this smart money, then perhaps I should actually do something similar, meaning that perhaps I should store some more cash. And of course, depending on how far you are on your financial journey or how tight your budget is, well, you know that inflation is high, meaning you can already see that you're getting less for your money when you're going and buying goods and services or paying rent or gasoline or whatever. Well, then perhaps it is actually time for me to make sure that I have sufficient and if we're heading for a recession, well, worst case scenario is that you would lose your job. So perhaps it's now not the time to have a really high risk profile. Perhaps if you, for instance, have a portfolio where you say you always want to have between 0 and 20% cash, then perhaps you should start to lean more towards the 20% than towards the 0%. But all of this, of course, depends on how much risk that you can afford to take. So the best way for me to try and illustrate this is, of course, through an example, meaning my portfolio. So if we first start by looking towards The Intelligent Investor by Benjamin Graham, since I only have individual shares in my portfolio, meaning my portfolio only consists on stocks, then Benjamin Graham suggests that you should always be capable of covering 12 months of expenses through your emergency savings. Well, when I'm then looking at an inflation above 9%, then perhaps my emergency savings should be increased by 10%, so I'm actually sure that I would be able to cover. And if I still think that the inflation has not topped yet, then perhaps it would not be unadvisable to actually increase my emergency savings by perhaps 15% before I continued to investing. So this was just a very simple way for me to explain how I'm trying to adapt to the current situation. But since I am a dividend growth investor, you can actually make it just a tiny fraction more complicated. So if we go into my dividend sheet here, well, the cash reserve that I have should be able to cover 12 months of expenses. But since I have this passive stream of income through dividends, even in the case of me losing my job, well, that is the whole point through this passive stream of income, then perhaps I can actually lower my cash reserve amount with the amount of dividends which I am receiving, with that small little caveat that if we're going into a recession, it is more than likely that some of the companies which I'm holding will actually cut their dividend or perhaps slash it completely, as we saw back in 2020. So perhaps I should not rely on $1,500 per quarter. Perhaps a much more conservative estimate would be take the lowest dividend paying month you have and use that as the average through all of your months. So I would perhaps rely on $600 instead of $1,500. And then finally, we arrive at the last topic for today's video, namely how the greatest investors win in markets and life. So this TED Talk is about a journalist who has been out and interviewing some of the greatest investors of all time. So I mean, it was really hard not to laugh when he explains his story about the interview with Joel Greenblatt, where he asked why or how Joel Greenblatt have become so successful an investor. And Joe Greenblatt just answered, well, it's actually quite simple. I simply figure out what a business is worth and then I buy it for less. And I mean, when he asked Charlie Munger a similar question about how he have become so successful, then Charlie Munger says, you have to focus relentlessly on one thing, and that is to make sure that you are not a fool. But what really piqued my interest as well is this common thing that all the great investors, they try to simplify the investing process as much as possible. Remove all the disturbing elements. Make sure that you remove all the noise. This is the same thing which I have mentioned earlier when I talked about an interview with Guy Spear. It really stands out that all these great investors, they try to make it as simple as they possibly can by removing all the noise. So that actually sums it up for yet another exciting week of the Lazy Money Game. So hopefully you have made it all the way to the end of the video, and if you have, then please consider leaving a like. It really helps out the channel a lot. And until I see you next time, bye!